Artificial intelligence, or AI, has been the talk of the town over the past 12 plus months, and for good reason, because it's really changing the way that companies do business and the way we live our lives. Don't think of artificial intelligence just impacting technology-focused companies. They are impacting all sorts, almost every type of industry. Think of Starbucks and McDonald's, who are going to utilize AI for taking orders within their drive-thrus. It is impacting everyone. As such, in today's video, we are going to look at 4 AI-related dividend stocks. All 4 of these companies impact and contribute towards artificial intelligence in one way or another, either through software, infrastructure, or some sort of other product, and all 4 of them pay a dividend. But before we begin, do me a huge favor, click that like button down below, as I truly appreciate it, and it truly helps the growth of this channel as I put these videos out completely free each and every week. I just ask for a little click of that like button. And with that being said, let's jump into the video. Hey everyone, Mark Rusin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me take a quick moment to thank today's video sponsor, which is The Motley Fool. The Motley Fool has a ton of great products and tools available for investors of all levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now. Definitely take advantage of that. It's completely free. All right, now let's get to our video talking about 4 AI-related dividend stocks, beginning with dividend stock number 1, which is Microsoft, stock ticker MSFT. This was probably foreseen by many, as Microsoft has been a leader and a game changer in AI so far, as they have a big investment in OpenAI that they did early on, which owns the likes of ChatGPT. Microsoft currently has a market cap of $2.5 trillion, obviously the largest on the list and one of the largest companies in the world. Over the past 12 months, shares of Microsoft have climbed 33%, and year to date, the stock is up 40%. Microsoft is a company that has had a ton of momentum over the past few years, and one of those reasons is because they've transitioned their Microsoft 365 products, that's all of the Office-related products, Microsoft Excel, Microsoft Word, PowerPoint, all of those things into more of a subscription-based model, which allows them to get that reoccurring revenue. And the other area that has been crushing it for Microsoft has been cloud. Although the growth is starting to slow, it has still been substantial growth that we have seen with their Azure products and being one of the largest cloud providers in the world. And with AI just getting bigger and bigger, that has a higher need for more cloud space. A company that continues to utilize their capital allocation wisely and continue to innovate is definitely a company that I want to have in my portfolio. One area where Microsoft is looking to incorporate more AI tools is through their search program, which is Bing. It has gained some traction, but still not threatening the likes of Google by any means. In terms of dividends, Microsoft isn't all that known for their dividend. After all, they pay a dividend yield that is below 1%. But it's not because they're not growing their dividend. In fact, they've been growing their dividend at a rate of 10% per year over the past 5 years. Remember, dividend yield has an inverse relationship to the stock price, and Microsoft has had so much momentum, even though they're increasing their dividend each and every year at a rate of 10% or more, the dividend yield still goes down. Microsoft pays a dividend that yields 0.8%, and over the past 5 years, as I mentioned, they have grown their dividend at an average annual rate of 10%. Which is some nice dividend growth. In addition, management has increased the dividend for 20 consecutive years, closing in on that Dividend Aristocrat status. The payout ratio is quite low, leaving plenty of room for continued dividend growth for the company moving forward. Valuation is the tricky part. We know that Microsoft is going to continue to grow moving forward, especially with the additional revenues that are going to start coming in for AI. Looking here at this fast graphs chart, the blue line represents the average earnings multiple over the past 5-year period, which is 30 times. And over a 10-year period, the average multiple for the stock is 23.5 times. Now let's look at where the stock's trading today. Analysts are expecting Microsoft to generate EPS of $11.05 per share over the next 12 months, which equates to a multiple of 30 times, in line with their 5-year average. Analysts are largely on the same page, as the average price target for Microsoft is $347, which is only 4% higher from today's close. So do you believe that Microsoft is a buy at the current valuation of 30x? Let me know down in the comments section below. AI dividend stock number 2 is Broadcom, stock ticker AVGO. Now, Microsoft has long been a fan favorite within my portfolio, but Broadcom actually has been one of my favorite dividend growth stocks for a number of years. If you look back and flash back just a few years, Broadcom used to have a very low valuation and a 4+% dividend yield. Now, I own both of these stocks within my dividend portfolio, and if you want to see my entire dividend portfolio, you can do that by signing up for my weekly newsletter, the Dividend Investor's Edge. I will put the link down below, and premium subscribers get a monthly update that shows my entire dividend portfolio, all the stock buys and sells that I did for that particular month, my dividend income, what's coming ahead, and watch lists that I have for 3 particular stocks for the coming month. But now back to Broadcom, which has a market cap of $350 billion, obviously not quite the level of Microsoft, but still a large company in themselves. Over the past 12 months, shares of Broadcom have climbed an astonishing 72%, and year-to-date, shares are up almost nearly 60%. Broadcom is one of the largest semiconductor companies that has very powerful chips, which they create for other technology companies that go into AI-related products. After all, you cannot have AI without the power of these chips. Broadcom breaks out their revenues into 2 separate categories, or segments, I should call them. One being the semiconductor revenues, and the other being the infrastructure software segment. Semiconductor revenues make up 75% of total company revenues. And just looking at the semiconductor segment alone, which is where AI is, AI-related revenues account for 15% of the semiconductor segment, with that exposure expected to rise to 25% just in the next 12 months alone. So AI is growing at a rapid pace for Broadcom. The company is well known for generating strong amounts of free cash flow, which should only grow as AI revenues increase as well. The strong free cash flow allows the company to continue to grow its dividend. Speaking of that dividend, Broadcom has a dividend yield of 2.3%, and over the past 5 years, management has grown that dividend at an average rate of 21% per year, which is phenomenal growth. In terms of valuation, the stock has made a huge move over the past year, or really over the past month or so, and the stock is up roughly 35% just in the past 30 days. Analysts are looking for EPS of nearly $42 this year per share, which equates to an earnings multiple of 20 times, which is well above the company's 5 and 10-year average multiple of 14 times and 15 times, respectively. Again, I own Broadcom and definitely going to continue to have it on my watch list, but just can't justify the current valuation at this point in time. The third AI-related dividend stock on our list today is Cisco Systems, stock ticker CSCO. Cisco Systems designs and manufactures switching and network related across the communications sector, and they've been around since 1984, making them really a veteran, or more of what people want to call a utility technology company. Cisco has a market cap of $207 billion, and over the past 12 months, the shares are up 15%, and year-to-date, shares of Cisco are up 6%. This day and age, when many of these younger technology-related companies are trading more volatile at times, that's why many refer to Cisco as more of a utility technology company, more of that slow, grinded-out type mentality. But the company has found traction here in 2023 thus far. And some of that excitement is due to AI and the potential there moving forward. Cisco recently reported strong Q3 earnings with annual recurring revenue of nearly $24 billion, posting double-digit growth in their subscription revenue. Given this, management once again increased their 2023 full-year guidance and introduced some key focus points for the business to sustain long-term growth. The company outlined 3 main areas: continued growth in their subscription-related, their annual recurring revenue, the other being security, and third being, you guessed it, artificial intelligence. Management believes that artificial intelligence total addressable market is going to be $8.5 billion by 2027, growing at a CAGR of 40%. Through the first 9 months of the year, Cisco has generated free cash flow of $13.3 billion, up from $9.2 billion at the same time last year, which is an increase of more than 40% year over year through these first 9 months. This free cash flow helps fund the company's growing dividend, which has been growing for 12 consecutive years now. Cisco yields a dividend of 3.1%, so much higher than the first 2 that we looked at. And they have a 5-year dividend growth rate of just 3.4%. So a little bit higher yield, but much less in terms of dividend growth. In terms of valuation, analysts are looking for EPS of $4.04 per share over the next 12 months, which equates to an earnings multiple of 12.6 times. Over the past 5 years, for comparable purposes, shares of Cisco have traded at an earnings multiple of 16 times and a multiple of 14.2 times over the past decade. So as you can see here, much lower in terms of valuation based on their average and their current valuation as compared to Microsoft and Broadcom, although those two are growing at a much more rapid pace. So Cisco is more of that value technology play, if you will. The fourth AI-related dividend stock on our list today is International Business Machines, stock ticker IBM. IBM is by far the oldest company on our list here, being founded back in 1916, and they have built themselves into one of the largest computer companies in the world today. IBM currently has a market cap of $121 billion, and over the past 12 months, shares are down 3%, and year-to-date shares of IBM are down 6%. So it's really a flipped script here. The first three companies have all increased in value over the past 12 months and year-to-date really, but this company has really been dragging their feet and stuck in the mud. Although they've, let's call them, been experienced, they have been failing to grow their top-line revenues, who have really been decreasing since peaking out back in 2011. Speaking of that, looking at this chart here of revenues by year for IBM, you can see how the revenues peaked out at $107 billion in 2011 for IBM, but fast forward to 2020 when IBM saw revenues fall to $55 billion, essentially being cut in half from their 2011 highs. But revenues have increased the past 2 years if we're looking for some positive momentum here, and the company generated $60.5 billion in 2022. The company's struggling to muster up revenue growth and top-line growth here in this period of this AI craze is one reason that you look at IBM and see them as one of the only AI-related technology companies that has failed to increase their share price over the past year plus. IBM is looking to carve out their niche in this world of AI. And in April of this year, Moderna signed an agreement with IBM to utilize the company's technology in quantum computing and, of course, their artificial intelligence to advance their mRNA research. The company's AI capabilities are still largely unknown by many businesses, but there is opportunity for them as well. IBM is much more related to Cisco than they are Microsoft and Broadcom. Being a much older company, they are more of that utility technology company that's still looking to carve out their niche for AI, but there is definitely deep potential for the company moving forward. IBM definitely pays the highest dividend yield on this list, currently sitting at 5.0%, and management has increased the dividend for 28 consecutive years, making this stock a Dividend Aristocrat. In terms of valuation, analysts are looking for EPS of $9.44 per share in 2023, which equates to an earnings multiple of 14.2 times, which is in line with the company's 5-year average, but above the company's 10-year average of 11.8. So IBM is more of that slower growing, value type technology company to keep an eye on for AI-related dividend stocks. So there we have 4 AI-related dividend stocks. The first two definitely being our faster growing companies. You have Microsoft and Broadcom who are doing big things and definitely have their hands deep in the AI craze. And then you have more of the utility type technology companies, the older players on the road, the veterans, should we call them, with Cisco and IBM. Down in the comments section below, let me know which of these 4 AI-related dividend stocks that you want to own in your portfolio and think have the biggest upside moving forward. Is it Microsoft, Broadcom, Cisco, or IBM? Definitely want to see those comments down below, and if you haven't done so yet, make sure you smash that like button. I truly appreciate it, as it really helps the growth of this channel, and we'll see you in the next video. Take care.